The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 11th magnificent Monday edition of the Money Masters Show. Hope everyone out there is off to a great start of their day. Let's make sure that you and I, that we do everything we can to have a magnificent Monday. I'm Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome here during the next hour, well, it's to share with you extraordinary tools for trading and investing. Those include the A to B equals CD tool, that lightning bolt pattern. It includes Fibonacci expansions and retracements. It includes Japanese candlesticks. Our call-in number here, and this is an interactive show, so feel free to give us a call. You and I, we can go hunting for bulls and bears. Our numbers are 877-927-6648. Internationally, you can give us a call at 727-445-1044. This is Magnificent Monday. I'm Steve Rhodes, and welcome to the show. We've got Dow Futures. We got the Dow trading up 54 points. She's trading out at 16,607. S&P up about 9 points, trading at 1940. NASDAQ Composite up 29, trade out at 43.99. Russell 2000 up 9 points. NDX 100 up 24. New York Stock Exchange up nearly 0.5%, up 47 points, but good market breadth. Nearly 4-1 advancers leading decliners this morning out here, and that is very positive. In fact, if that continues, then this past Friday was a bottom, and maybe a decent bottom out there at that. Well, we'll take things one day at a time. There's a lot of time left in the trading session. Really, the cash market only going for 38 minutes so far, so we'll see what the day brings. Now, leading the charge, the upside, and I do mean leading the charge, it is Priceline. PCLN is a ticker symbol. Out with numbers here before the bell. It's up $40, up 3%. So that is a nice move. It looks like volume behind the move as well. So we'll take a look at Priceline. Looks like they missed their top line, but beat their bottom line substantially. Bottom line numbers: net income $576 million, about a 30% increase over the prior year. Nonetheless, let's go take a look at Priceline. Let's go see what it is doing first. We'll start off here with that. This was trying to form an A to B equals CD to the downside, but that pattern here, that was negated back on August the 4th as price moved higher with some volume behind it, 1.3 million shares. So let's go get rid of that pattern. That never came to fruition out here. There we go. Now let's take a look at the pattern that is coming to fruition. That's an A to B equals CD to the upside. And that's the swing point that we're going to take a look at. May 29th, the high was 1292.66. That's the number that had volume of 810,000 shares. Well, you came into that level with 1.4 million shares. That was telling you, I'm getting ready to pop through that resistance zone. Today, you've seen already 901,000 shares. Okay, so what does that set up for Priceline? That sets up an A to B equals CD to the upside. If you take a look at the A point, it's going to be your swing low on May the 8th. Your B point out here is going to be the high from May 29th, and your C point is going to be the swing low from June 16th. 1-to-1 A to B equals CD says Priceline ought to get up to its highs again. 1388.40 is your 1-to-1 A to B equals CD. That's to the upside. The actual swing point high takes you to March 6th, 2014. That number, 1378. So you got 1378, 1388. That is where Priceline is headed to. If it can take out the high of 1378.96, do that with more than 484,000 shares, and see no reason why I can't do that. That could be set up a much larger A to B equals CD to the upside. Let's look at the weekly chart here for Priceline. Let's go see what the weekly chart formation shows us. Weekly chart here shows almost more of a consolidation at this stage until Priceline takes that out. Why do I say that? Well, if you take a look at Priceline, if you come back to the weekend of November 18, 2013, that sets up the bottom of the consolidation. Let's go ahead and draw that on our box out here. And what I mean by that is if you take a look at that candle session, you'll see the price came back and tested that area on February 3rd. Important lows in the marketplace, an important low for Priceline. It came back and tested that area back here in May the weekend of May 5th, 2014. So that's the bottom of the consolidation, $1,110. The top of the consolidation out here is going to be that swing point high. Well, we don't know if it's going to be the top of the consolidation or not. We'll watch. If Tesla gets up, rejects that area, volume up there on a weekly basis, that's not such a big deal. 2.8 million shares out there, so it should be able to have enough volume as it takes on that 1378. Now, if it can take that out with volume, shoot. There's no telling where this is. Instead of giving the A to B equals CD on this is so huge that I would be remiss to even give you that price. It's about a 800 A to B equals CD. It says that price line would move up to about 2100. So let's not go there. Instead, let's use some other expansion tools as to where price would move to. And let's take a look at our Fibonacci expansion. And I'm not saying price can't do that. I'm just saying, hey, let's be reasonable here when we take a look at price projection. So if it takes out the 1378.96-ish range with volume, well, the next level, the upside is 1458. That seems like a more reasonable number. That would be your 1.272 expansion of this set of swing points. If it can't take that out, then what may be in place here is the actual consolidation pattern, trading anywhere between 1110 and 1378. That is on price line, but on a daily chart looks very strong out there. Also moving up this morning, Tesla up $14, trading out at 262. Tesla's going to go try to tag that high at the 260. This is the weekly chart. It's 265 even Steven. It's a high volume bar on the weekly chart. Needs 98 million shares to get over that level and then form a weekly A to B equals CD to the upside. If in fact it can do that on the weekly basis, the A pattern is going to be, or A point is going to be November 25th, 2013. The B point is going to be that high volume swing point on the February 24th time frame. Your C point was moved down to May the 5th on the weekly basis. I would say 326.12 if in fact Tesla can take out the 265 level. Nonetheless, before we go into continue on with all the individual stocks out here, we did end the week, and that says we need to go take a look at the weekly charts, or I'd like to take a look at the weekly charts with you and get a feel for what really took place last week. So let's start off. I don't like that. Let me come back. I don't know why the chart looks like that. So let me come back and we'll take a look at let's start off with the Dow Jones Industrial out here. Let's go take a look at it. So if we take a look at the Dow out here, last time we saw a significant bullish candle. That was all the way back here, this little hammer candle on February the 7th. That makes those February 4th lows really critical. Why? Because when you close below a hammer, we're not there. I'm not saying we're going to get there, but if in fact we were to see price continue to move lower, not necessarily today. You want to watch that candle session. You want to watch that low, which, by the way, that price point is at 15,340.69, a very key level to be watching. But that's where the bulls are hanging out. We can see this little dark blue line going across my screen happens to equate to a 50-period exponential moving average. We can see that level has not been broken through to the downside since November of 2012. That is priced out today at 16,170. The bounce so far. How about that? The bounce so far. If we take a look at the retracement here. Let me do this. It'll be easier for me just to switch back and forth out here. Let me take a look at the Dow. Now this is going to take me to the daily chart. Then we'll switch back. Oh, this is not going to take me to the daily chart. Let me switch over to the Dow. Come on, indexes. There we go. Now we got it. Okay. Let's take a look at natural retracements here from the swing point high down to the low. That's the July 17th high down to the low that took place here on Thursday last week, which was out at 1633. The Dow on the cash basis hasn't even made the 0.382 retracement, so 16,646. If it can clear that level, which I suspect it wants to do, based on all the signals that we're seeing here thus far, then what the natural move would be is up to the 16,839 area. Hey, if it can do that, it might as well go try to test that July 31st high at 16,869 out there. So thus far, the Dow, which is the weaker link, if we take a look at what the Dow actually did, it really only made about the 0.382 retracement, slightly more than that, off those significant lows back in February. Remember, actually, we were talking about the hammer candle on the Dow. Well, if you take a look at the daily chart, and we go from that swing point low, that was on February 5th. That price was at 15,340. If we go from that low up to the high, a key reversal, trading session high on July 17th, really just a little bit more than a 0.382 retracement. So the Dow is trying to mount a charge out here. So the weekly basis for the Dow, no significant candle formations or anything as of last week. Let's go back. Let's take a look at the NASDAQ composite now. Let me see if the chart, there we go. The chart looks a whole lot better out there. If we take a look at last week's candle session out there, more of a high wave-ish type candle, like, hey, hi, it's waving, high five. High wave candles, what they mean is the market has lost its way. If we take a look at the NASDAQ composite on a weekly basis, it's in Stevie's cautionary zone using the Rhodes momentum trading signals out there. But otherwise, it's not bearish at all. If we take a look at the monthly chart, way too early in the month, but why not go over and take a look at the monthly chart out here? The monthly chart tells the entire picture. There's absolutely nothing bearish about the NASDAQ composite. And that's going to be important for us to watch as to how things unfold out here. No bearish patterns inside the composite. This market will not careen lower without the NASDAQ participating in that move. If we take a look here at the transportations, let's go take a look at the Dow Jones Transportation Index out here. Let's go see what it did. This is the monthly chart. Monthly chart has a price relative strength momentum top out here. And a nice bear sash candle evening star. That took place really as a 3-candle configuration over the week of July 18th, July 5th, and August the 1st out there. Nonetheless, this too has not really broken down. It's given the inclination of wanting to break down out here, but really it's still in bullish mode on a weekly basis. On a weekly basis, I could not make an argument for you that the Dow Jones Transports has broken down. Just not there in the cards as we speak. No real significant candle formation on the weekly chart for last week. If I switch over, take a look at the daily chart for the trannies out here. The trannies, nice little bull sash candle. Looks like also a key reversal trading session last week. That's where the high and low of the prior, it's a daily chart. So on Friday's candle was the key reversal. That's where the high and low of Friday's session, I'll get it out, exceeded the high and low of the prior session, closed to the upside, and you were coming out of an oversold condition out here. That says probably about the 82.56 becomes its next resistance point, and that is inside the Dow Jones Transports. Let's go back to the weekly time frame. Let's go back. Let's take a look at the S&P 500. Let's go see what she has been doing on a weekly time frame out here. Also, just in the cautionary zone. On a weekly time frame, it gets pretty simple. If we see on a weekly basis a close above the August 1st high, and that's at 1984.85, you will have just received the next buy signal on the S&P 500 in an intermediate term time frame out there, and that is the trading session to watch on the weekly basis. On a daily basis, the trading session to watch, well, I think we've already watched that. That was a trading session here from Thursday, so we've already gotten inclinations that the S&P here has formed a bottom out there. And we'll see. Hey, look, I realize the bounce has been on light volume out there. Nonetheless, there are enough signals here that suggest if today especially, that New York Stock Exchange has more than what? I think it was 1,085 net advancing issues, and right now you're at 1,826. The bulls will be back in town. 877-927-6648. This is TFNN. This is Steve Rhodes. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 50. S&P is up 9. Let's go peeking on some currency pairs out here. Last week, we were fielding the call from Peter in Park City. He was taking a look at the euro-U.S. dollar. He loves to trade that currency pair, and what he was trying to identify was a potential bottoming pattern out here, or just really just trying to understand my thoughts on where price might move to. So if we take a look at the daily chart here for the euro, much like the markets made on Friday morning when the futures were moving lower, they were doing it on one of my favorite patterns out there, what I like to call the price Rhodes momentum indicator pattern. It's entire package. In fact, if you'd like to learn about that, happy to teach you. Go test drive my newsletter service. Go to the homepage of TFNN.com. You'll see in the front page, you'll see under the contributors, you see my name for 2 hours there. Just click on the Trader's Edge or this show, the Money Masters show. It'll take you to a landing page for me. Click on Mastering Probability. That's my newsletter service. You can test drive it for the next 30 days. Extraordinary education that is included with inside of that newsletter. And you also learn how to trade my favorite pattern out here, one of my favorite patterns. Well, in this case here, that favorite pattern signaled here on Friday that the euro, in fact, is trying to put in a bottom. Now, today you're not seeing much follow-through, and that's really what I need to see. At a minimum, I need to see the euro close today's session above the I'm sorry, I'm pushing the wrong button here. That didn't make sense for me. Give me a moment here. A close above the open of the trading session from August the 7th. That open I show as 1.33809 out there. You're trading at 1.33830 as we speak right now. So it would add more to the case if we were to see some follow-through, much like we are in the markets here. The reversal candles, I always like to wait one more trading session Now, on a 30-minute chart, that means one more 30-minute candle. On a daily chart, it's one more daily candle out here. But it is trying to put in a bottom. This candle here, even though it looks like a hammer, smells like a hammer, I'm referring to the trading session of August the 6th. It wasn't. But these three candle sessions here, where you've got some longer, lower shadows, remember, the body of the candle is truly the essence of price. But you can learn a lot from the wick of a candle out here. So we can see that bulls are trying to, whether that's Mario Draghi or whomever it is out there, are trying to support the euro. Now, the problem is that the euro fails here. Not really a problem. Is that you're going to see much lower price. Just the A to B equals CD down pattern on the euro, just the 1-to-1 pattern takes you into the price point of about 1.3207. So if we see a close below that trading session from August the 6th out here, that price point is 1.3332. That is likely where price is headed. So it's trying to form a bottom. Has the pattern to be able to do it, but you're not seeing any kind of follow through today. And that is on the euro-US dollar currency pair. That's looking at the daily chart. Let's go take a look at some other currency pairs. Let's look at the US dollar Japanese yen out here. It's a monthly chart. But let's go try to look at this on a daily time frame out here. There we go. What do we see on a daily time frame? The daily time frame. I remember what we wanted to look at here. We wanted to look at least the trend line or channel lines out here, and that was the break that we saw here recently. And I right now I'll just use the trend line. That's this right here. We saw that break, and it's at this stage it was a false break from a trend and a channel perspective here. And I'm referring to the trading session here of June the 30th. Once price broke through there with wide-ranging bar, which it was, on July 30th, it signaled that price, just like it had broken through here, and this was the channel line. I can move this down just a tad lower, probably come up with, there's the channel line on this. You can see, so from a channel perspective, it's pretty darn close. It's pretty darn close to trying to break through that. So we're going to call it in the ambivalent stage here, the U.S. dollar, Japanese yen. But if you take a look at the trading pattern back in November of 2013, once it broke through its channel line, I'm not showing the bottom of the channel, just the upper portion here. Once it breaks through that, it broke through, it's come back and it's tested it. But, the trading session here on August the 8th on Friday, oh, you got that long lower shadow out there, but it's not even it's not a hammer candle either. So we'll continue to monitor the U.S. dollar, Japanese yen, as at this stage here. I have to stay. I'm neutral with regard to what it is, what its message is to us at this stage, because it most certainly was trying to break out. If we take a look at the Great British Pound, U.S. dollar, let's go look at that on a daily basis right now. On a Friday session, moved quite a bit lower, below its most recent 0.786 retracement level of its move up from the trading session of May 29th through the high that was put in here on the trading session of July 16th. When we get back from this break, let's continue looking at the Great British Pound U.S. dollar on a weekly basis. It is on a monthly basis. I believe it's a pretty nice looking pattern out there. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 44, S&P is up 9, Composite's up 32 points. Before we went to break, we were taking a look at the Great British Pound U.S. dollar. During the break, I mentioned just as we were going into that break that the charts on the longer term looked pretty good. So I've got the monthly chart up on my screen for us right now. And the monthly chart here, let me get rid of that retracement level. One of the things that I'm noticing here is I went ahead and I drew the primary trading range boundary lines across the screen out here. That's the dark blue lines and this is a monthly chart that we're taking a look at. And if we take a look at the largest number of co-located opens and closes, in this case here, I'm back to the July 2009 close, the open on the very next month here from August of 2009, by the way. Then we can see that area of resistance was met back in April of 2011. That close out there, 1.6745. The open of the following month. And then we can see here we've had basically 3 opens and or closes between the months of February, March, and April in 2014. We can see that level has been hit. That level being, by the way, right around 1.670 out here. So it looks like that's where price on a monthly chart is moving back to. It'll try to test that area. We can see a bit of a rising price channel that has evolved here on a monthly basis after the lows were made back in March of 2009 out there. From a retracement standpoint, from the high down to the low, the highs back in November 2007, down to the lows in 2009, it's above the 0.382 retracement level. That says the 1.8234 is likely its next next target out there, and that's what the weekly chart is showing us for the Great British Pound U.S. dollar. If we look at the weekly chart out here, a little concerning here in the weekly chart, it's got a 3 drive-ish to a top pattern out here. What do I mean by that? We'll go ahead and draw that in on the screen. It's not perfect. It's not El Perfecto. But it is pretty good out here as it made. Was this the high or was this the high? There we go. That high right out there, 1.6 minute expansion. So you've got a 3 drive. It certainly qualifies as a 3 drive to a top pattern. And that was the week ended either the July 18th. You could use actually July 4th as well out there. But no reversal signal, no single candle weekly reversal session out here. But the other problem with that 3 drive to a top, and does suggest a pullback, and maybe a little bit further than the 167 level, is right about the 1.647 is an area where price broke out of with a nice wide-ranging bar the weekend of February 14, 2014 out there. So if we take a look at that 3 drive pattern, typically price will at least come back to the bottom of that first drive to the downside level, which is your swing from March 28th. So the weekly message is that the Great British Pound U.S. dollar could pull back to about the 1.645 level out there, short of any kind of reversal. It's neither overbought nor oversold, so plenty of room to run to the downside. We can also see that a very significant rising trend line here, significant from the standpoint that this thing was almost vertical, has been broken. So, that trend line's not going to influence me as much as the other patterns that we are taking a look at. So I hope that helps you if you are trading the Great British Pound U.S. dollar. Let's go take a look at some equities here that are moving and grooving in the marketplace. Let's look at some things to the downside. Price up $32 right now, and Kinder Morgan on a consolidation. That's up $15. Tesla up $14. Netflix is up $10. But let's look at a couple of things here to the downside. Arista Networks, ANET, is the ticker symbol. Let's take a look at this on a daily chart. Daily basis down about 4%, down $3. Looks like this thing had quite a reversal on Friday. Arista Networks. This does not have a lot of activity, so it looks like June 6th may have been a IPO. And this is a daily chart. Not exactly a ton of volume here, 700,000 shares for the most part on a daily basis. Nonetheless, it's selling off. Looks like this is going to come all the way back to its IPO date at this stage, which could be anywhere between $60, even Steven, maybe even as low as $55 out here. Not enough data to really spend a lot of time doing any kind of technical analysis on it. ANET is the ticker symbol. Let's take a look at Copa Holdings. CPA is the ticker symbol, off about 2.5%. This thing is not very good looking out here, not unless it forms an island bottom, which it certainly has not done at this stage here. Big volume off of the last from a few days ago to the downside, 2.8 million shares on August 7th. That was coming into a high volume low. It was coming in there with volume. Suggests to me that price will get back down there. Never tested that low. It does wants to test that low, and that's the March 6th trading session, and that's out at about 121.11. The volume there was 1.9 million shares. Price came back with 2.8 million shares. So too much volume to the downside inside CPA. We've got Zillow. Zillow's trading off 280, down a couple of percent here this morning. Zillow is actually pulling back into a sign of strength out here. So Zillow actually sets up a buy. So look at this pullback here. This is kind of an interesting stock chart. This is one maybe to put on your pad of paper. So I'll go ahead and put it on my pad of paper. I would never ask you to do something you would that I wouldn't do. So Zillow here, if this can pull back to the breakout session, last breakout was really from the actual session I would be using is July 23rd. That low is 124.51. The actual breakout took place a day later, 7.7 million shares, and the low there was 125.60. So that really is our range. If you can pull back there, test that lighter volume. Do we need a sign of strength out there? No, not necessarily. It would be your first place to take a step. What you'd like to see maybe is some type of bullish reversal signal if price continues to pull back inside of Zillow. But right now it's just trading down into its a sign of strength out here. Let's put this on a shorter-term chart. Let's go see if we can find anything out here that is helpful in understanding why price is where it's at right now. Let me switch over to a 10-minute chart. We're just going to try to look at volumes if I can bring it back that far. Well, I can. There we go. So that's the big breakout. Now, that's really the big breakout session. You can see even on that 10-minute chart. I'll pull it back there and we'll just expand it out a little bit here, and we can draw a line. So here's that volume session. Here's that volume breakout. And if I'll draw some lines across here, so we'll go see where prices are actually traveling to. So if we know the bottom that it broke out of. This is a 10-minute chart. If we take a look at that first 10 minutes out here, that's going to be at about the 139.63 level. So we'll see if price is anywhere in that vicinity. Oops, I didn't mean to do that. So let's see, 139.63. Let's come across the screen out here, see where price is trading down into. No, it's trading well below that. So, yeah, I'd say we need to wait for Zillow to get back to that daily breakout level and see if it can test that area with some light volume. Let me put this on a weekly chart as well. Let's go see if there's a weekly market profile low out here where price might be hanging out at. And no, you've got the point of control down at about 117 out here. So weekly basis, this doesn't look too bad as well. So Zillow, it's got a high volume high on a weekly basis. And that was last week. No, I'm sorry. That was July 28th. So it says Zillow wants to eventually get back up to 164.90 out there. Not too bad. That's a ticker symbol Z. You've got Illumina. ILMN is the ticker symbol. And we'll focus on some of the stocks that are moving to the upside as well. But if we take a look at the Illumina, down $2.93 off $1.75. I want to take a look at this on a daily time frame out here. Let's go see what this is trying to do and target. It's got some resistance out here at about 170. That downdraft session from July 24th, the low of which is 170.56. Expect that to be your resistance area. If it can close inside there, do it with more than 2.8 million shares. That would be nice. It does have some support. So this traded back into its most recent sign of strength, and those funds are still around, or they would appear to be around. There's the breakout session, which was the low of June 4th. That price point was at 158.01. You can see volume out on that trading session was 1.9 million shares, and this price came back there. And that's not the breakout volume. That's the session where it broke out from only a million shares on August 1st, 900,000 shares the following day, 797 after that, 635, 977. So Illumina does not have a lot of sellers in this equity out here. The actual breakout volume was June 5th with 5.8 million shares out there. Nonetheless, it does have some resistance out here on the trading session of the trading session from July 24th out there. So that's its real resistance level that it needs to deal with. Whoops, come on, Steve. I don't keep drawing those lines across the screen out there. If it breaks below that meaning the low from August the 6th. Remember, it has light volume there, right? 635,000 shares. If selling on this thing all of a sudden woke up, then that would set up an A to B equals C to the downside. But I don't see that here just yet, and I don't see a high volume low that it would be going out to a target either. And that is on ticker symbol ILMN, and that is on Illumina. All right, let's take a look at some things that are bouncing to the upside out here. Let's take a look at Netflix. NFLX is the ticker symbol. Let's go see where that is headed to. Netflix trading out at $4.56 and change. It's taking out a recent little doji candle out here from July the 21st, which is also getting us back into its sign of strength area from July 1st out here. Volume on that doji candle July 21st, 4.9 million shares. Today up with 817 in an hour and 15 minutes of trading. That says the volume, if it could keep up this pace, is about similar to that little doji candle from July 21st out here. Netflix, let me see. What do we got on Netflix? It's up above the resistance of that selling that took place inside this equity on July 22nd, so that's not too shabby out here. It's really been consolidating. It tried to break out of the consolidation and had the volume behind the move. That was on the trading session of July 1st. That consolidation pattern, though, is really going to use the highs out here at 458. That was from the trading session. Looks like the trading session here of March the 6th. So it's trading into that level again. That's only got 1.6 million shares. It's trading up there with some pretty good volume here today. So it looks like Netflix wants to take another run for its highs. That would be July 2nd. That price level is 475.80 or so out there. Let's take a look at Mattress Firm. Let's go to the mattresses. MFRM is the ticker symbol. Looks like they had a sales increase of 35% in their fiscal second quarter, but I don't have the numbers. But boy, this thing has gapped up, and it's got some nice juice behind the move out here. Let's go take a look at Mattress Firm. Of course, you see these retail stores on just about every street corner out there, almost more so than you might see a Walgreens or a CVS these days. Well, maybe not that much, but let's take a look at Mattress Firm because it's taking out its highs. Let's take a look at a longer term time frame. Let's look at the weekly chart and see if that is in fact the case. Yeah, it most certainly is. So Mattress Firm here gapping up and taking out its highs. A B point would be the trading session from March 31st, 2014. On a weekly basis, only 897,000 shares. Shoot, it's done 448,000 for the week. So barring some unforeseen selling inside this equity, the buyers want to take this price inside of Mattress Firm up probably into the price level of about 62.49 to maybe even 68.07. So things look pretty bullish here inside of a Mattress Farm out here, Mattress Firm actually. That is MFRM is the ticker symbol. Let's see, what else we got? We got El Paso Pipeline. EPB is the ticker symbol. Let's go see what it is doing. It's off of its session highs, gapped up here this morning. Oh, ran right into its supply line. That supply line here, this is what we have to fear from the bullish side of the market, is the same thing that we're witnessing right here inside of El Paso Pipeline. And that is the supply line out here from its trading session of December the 2nd, which had a downdraft session of volume of 13.8 million shares. So it got up there, and the folks there that were holding onto that equity, the sellers were back in town. It needs to clear that 41.51 area. It's got a good volume behind the move out here, but looks like it is more sellers than buyers in control. So if we take a look at that same stock chart here, and we just simply switch over to the SPYs and diamonds. So let's go do that. Because we'll see the same type of pattern that we want to pay attention to, and we'll certainly want to pay attention to volume. And what I'm referring to there specifically is I'm looking at the July 31st time frame. There's our volume bar, and so inside the diamonds, it says the top of that candle session becomes resistance level number 1. Resistance level number 2, well, because it gapped down, we would go ahead and use the low of the prior session out here, and that's at about the price point of 167.78. Now, volume there is 9 million shares. Volume on Friday, the upside was not too bad, 5.4 million shares. But it's going to be that volume, it's going to be that area that we want to watch as the diamonds continue, as this market continues, at least at a minimum, its counter-trend rally. But at the moment, may be suggesting much, much more than that. If we take a look at the SPYs out here, let's do the same thing for you for the SPY. We'll give you the numbers out there. We'll have to do that when we get back from the break. We'll do that, and then we'll also take a look at ticker symbol CNQ or Peak D in our Tiger's Den. Right now, we got the Dow's trading up 48. S&P is up 10. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 42 points, S&P up 9, NASDAQ Composite up 34 points as we speak right now. Let's go back. Let's take a look at the SPYs. Let me give you let's go look at the SPYs. We'll give you the numbers on the SPYs out here as far as the real resistance zone. And that's going to be that high of July 31st, which is 195.78 out there. Now, volume this morning in the first hour and almost an hour and a half of trading, we've seen 26 million shares, 26 million shares going going against that downdraft of 183. Hey, even if we multiply it times 6 times 25 is only going to give us, it's going to give us about 125 million shares, which is not the volume that we would see out here. So it looks like still not too bad. Friday was 117. It is still the summertime, the last weeks of summer for many, as we have back to school starting here in Florida, actually, this morning. So that seems early, doesn't it? Nonetheless, pretty decent volume on Friday. A little bit of follow through here today. Look for that 195.78 to 196.16 to act as a resistance area. Our man Peak D wanted some information on CNQ, Canadian Natural Resources, is the entity, since he likes the name, or she, I don't know if Peak D is a man or a woman out there. So let's take a look at Peak D out here, and let's take a look. He wants to understand, he or she, boy, I don't know why I can't get that out of my head out here, but looking for, I guess, a buy point or an entry point into CNQ. If we take a look at it here, first of all, we're going to see the trading session from August the 8th. That was a Thursday, August the 8th out there. Big volume to the downside. So this has got a high volume-ish low out here. That high volume-ish low was trading into another high volume low out here from the trading session of May 10th out there. So I'm not seeing any bullish action. The candle session here that we can take a look at from Friday was not a bullish reversal session out there. So I'm not seeing a bottom. If we just go ahead and we count the troughs, we use Basil Chapman's trough to the downside out here. Looks like you might be at a trough F. So I would wait on this thing, maybe see if this thing can get down to a letter G for you. Of course, that could have recycled out here. So maybe this is in a F/D. But I'm not seeing at this stage here any signs or reasons why you would want to get into a long position here. And that is on Canadian Natural Resources. It's got bearish exponential moving average crosses out here. It's got volume at the lows. It looks like this might have some further work to the downside, and that was for Peak D in the Tiger's Den out there. Folks, if you hadn't had a chance to check out the Tiger's Den, and for all of you that are new listeners, new viewers here at TFNN, because you're using eSignal version 12 out there. In fact, if you do use version 12, just go to the eSignal app. You'll see it along the top of your screen. Click on the media button, and this show will simply go ahead and stream live to you. So you got 10 hours a day of live programming. We've got Basil Chapman. He's up next. He'll teach you about the Chapman Wave. We've got call-in talk shows. So the number here is 877-927-6648. After Basil today, because it is Marvelous Monday, we've got our man Larry Pesavento. He'll be on from 12 to 1. Then Daryl Martin from 1 to 2. David White, 2 to 3, and the Tom O'Brien Show from 3 to 5 out there. So don't forget, we kick things off each trading session at 8 a.m. out here with our man John Logan. A quick peek in on the net advancing issues here inside the New York Stock Exchange. We're still up, nice market breadth, 1,858 net advancing issues. If it ends the day like that, well, if we come back and we take a look at the New York Stock Exchange, it's going to turn the summation index up. It's going to also get the price oscillator above the zero line. Those are both bullish signs out there and suggest that the low that we would have seen on Friday is a low. Folks, thanks so much for joining me. Have a marvelous Monday. I look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.